you are by and far one of the country's top retirement experts. And I'd like to kind of open this up a little bit and kind of move away from the alt space if you'd like to. But what excites you in the world of retirement planning and retirement strategies and retirement plans? What's exciting to you now? And maybe what might be, exciting in the foreseeable future? And this could be anything you're thinking about.
Okay. I'm just in the mood for threes today. So I'm going to give you one alternative answer first, even though you told me to move away from it. But I find this
Oh
to be
no,
really, really exciting and interesting,
I love it.
which is lending against alternatives. Super interesting area. Almost doesn't exist today. But I've heard Goldman Sachs does it for certain clientele, but it's not a mass product. There's one company I'm aware of doing it, but really interesting as we see I think we've got the fewest companies since the 1960s on publicly traded, as publicly traded stocks today, more and more private investments, security-backed lending's always been a thing I shouldn't say always, but been a thing for a long time, parameters
Yes.
around that. How do we lend in the alternative space with less liquidity? It's going to be a really interesting, opportunity and risk moving forward. But it's going to
Sure.
pop up because there's so much money moving there, and people are going to need liquidity. That's a really interesting one. For retirement, and this is my favorite thing in retirement, right, or retirement income planning right now, is can we bring in the technology that's occurring out in the space and get closer to what I call adaptive-based retirement income planning? And that is this notion that we are going to adjust your spending, based off of some type of model. And there's different models on how you do
Sure.
this. Is it a liability funding model? But that you can actually adjust your spending based off of how old you are, where the market is, your spending rates, and like where your underlying assets and income sources are. Most of our testing here in the retirement income space has been a static based model, meaning that we're taking some kind of static projection and rolling it out into the future. But where reality comes into play is that most people actually behave in an adaptive based model. Market drops,
Sure. Yeah.
inflation's high, you change your spending. But our
Right.
financial planning modeling and retirement income modeling hasn't quite caught up to that. There's been great research out there in this space. It's not complete by any means, but we're just starting to see technology platforms be able to incorporate this in. And to me, the next 5 years, we're going to see that show up all the way into things like our 401k plans and our brokerage applications and our advisory firms. But it's just starting to come. And that's going to give us a much more realistic expectation of what we can spend in retirement and adjust into the future, which I think is a great outcome that's coming to us. Third thing, though, is my big risk factor around retirement. I do not believe that there is a retirement income or retirement savings crisis in this country. All the bad news you hear in the world, reality is Americans are very resilient. We work really, really hard, and we have some really good systems in place in the United States that help with retirement. Again, Social Security needs help, Medicare, Medicaid needs some help, but they're foundationally actually very well designed programs, just from a functional standpoint. So putting that in place, though, my big concern around retirement planning right now is long-term care. One, the cost of it is getting really, really high, but the cost is not going up because just because it's going up in inflation. There's actually an underlying factor here, which is really scary, that as our family numbers decrease, right, number of kids that we were
Yes.
having, and we have this large baby boomer population, smaller next generation, large millennial group coming after, but we do not have enough caregivers in the United States to provide all the care that we're going to need over the next 20 years. That's a really interesting challenge because it's not a numbers, it's not raise taxes and this problem is solved. We're not going to have enough caregivers. And this is a crazy thing, is that number, basically the number of available caregivers from 2010 to 2040 essentially gets cut in half in a 30-year time period. And there's no demographic way to fix that in the next 16 years, right? Like you just can't do it. Immigration could be one way to do it, but right now I don't see the U.S. opening borders to everybody to come in and take care of our seniors here in the country. That's a really big and unique challenge that right now the think tanks, the government, private companies have not been able to solve. And it is an interesting one because a lot of times we say, hey, the private markets or public markets, whatever you want to say, just companies out there creating solutions can solve a lot of our problems. It's one that so far the market has not come up with a solution for. Long-term care insurance has struggled. It's not gone, but it's struggled. And the
Sure.
care facilities aren't keeping up with it because they can't hire enough people and there's not enough money saved to pay enough people to come into the business. So where do you solve that then? That actually, unfortunately or fortunately, is typically where the government has to get involved when you don't see the solutions coming out elsewhere. But they don't have a great solution for this. So to me, that's a crisis that we are facing in this country, is a long-term care one. I don't believe the other parts are, but for those who are going to need extended long-term care, we do not have the caregivers to provide for that today.